Ladies and gentlemen, following the United States attacks on 3 nuclear facilities in Iran last night, Iran is seemingly threatening a retaliation on a disastrous scale, shutting down the Strait of Hormuz. This, from day one, has been the worst possible scenario for markets outside of a nuclear weapon going off or being used. In this video, I will give you the latest details, what's happening, what the current situation looks like, and how this is likely going to impact markets coming tomorrow morning. You can see risk assets like Bitcoin sold off from about $103,000 or so down to about $99,000 at the time of recording this video. Ethereum down about 8-9%. So that's pretty bad. That to me kind of implies like an open down more than 1%, maybe down about 2% on the NASDAQ. Could be in the cards here shortly when futures open. So here's the news. Iran's parliament approves closing the Strait of Hormuz. Top security body is required to finalize decision on this measure. So basically, the leader of Iran now holds all of the power to shutting down the Strait of Hormuz. Now, we'll talk about my opinions on this here in just a moment, but Grok was asked in the comments of this post, quote, "How likely is it that Iran would be able to close the Strait of Hormuz?" Grok says Iran could likely disrupt the Strait of Hormuz with missiles, drones, mines, and small boats, given its strategic position. However, a complete sustained closure is unlikely due to strong U.S. and allied naval presence, including the Fifth Fleet, and Iran's economic reliance on the strait for oil exports. A closure would trigger swift military and diplomatic backlash, potentially isolating Iran further. While recent tensions, including U.S. airstrikes, raise risks, sustaining a blockade against international forces seems unfeasible. So here's the deal. If you're completely unaware of what the Strait of Hormuz is and the importance here, this is the flow of oil tankers roughly every day. Okay? Pretty much all of the oil that comes out of Iraq, Kuwait, a good chunk of it that comes out of Saudi Arabia, UAE, Qatar, like pretty much this entire region flows through the Strait of Hormuz. Anywhere between 20 and 30% of the world's oil supply on a daily basis flows through this strait. Okay, it's just a small body of water right there by Iran. Okay, if this were to be shut down, it would be a colossal problem for the world. Not just like, Israel and the US, but for everyone, for literally every country in the world. Because oil is a globally traded commodity. So if they were to actually shut this down for even a day or two, you would go into a pretty rapid oil deficit. And you would see energy skyrocket. Now, even the threat of shutting down the Strait of Hormuz is likely going to boost oil probably 10% tomorrow, if I were to imagine. Maybe even more than that. And oil has the biggest economic impact of anything ever. You don't even have to shut down the Strait of Hormuz to move energy prices. The threat of the Strait of Hormuz being closed is going to raise energy prices. It's going to raise fuel prices. It's going to raise oil prices coming tomorrow. And that is the single biggest, catalyst for the economy at any given moment. Okay. If gas is $6 a gallon on a national level, imagine the economic catastrophe that would be. Okay, or if it goes up $1, like that is billions of dollars every day that people have less money to spend in the economy. Vice versa, if energy falls, it's the biggest help to the economy for the same reason. Now, also from the Fed's perspective, an oil price shock at this point is not going to give the incompetent Fed more confidence to cut rates sooner. The Fed's incompetent. So add that to it, and maybe you're looking at even less cuts, a weaker economy. It's the worst possible scenario that could come out of this conflict, and it is a bit of a black swan event, especially if it does get cut off. Now, in other news, Israel's President Herzog speaks on CNN's State of the Union. He says that they can't confirm Iran's nuclear program is eliminated. And he says he does not intend to involve America in a war. And the UAE president discusses regional developments with Gulf leaders, probably in regards to the Strait of Hormuz. And authorities in New York and Washington are on high alert after U.S. airstrikes on 3 Iranian nuclear sites. Marco Rubio says this is not a war against Iran. And he says that if Iran retaliates, that would be the worst mistake they've ever made. He says the world today is safer and more stable than it was 24 hours ago. And U.S. Secretary of State Rubio says Iran rejected U.S. offer of civil nuclear program. And the IAEA chief Grossi on CNN says they cannot assess damage underground at Iran's Fordow facility. He also says that regime change is definitely not United States' goal for Iran. And Rubio says that Iran's nuclear capability is certainly degraded. He says that the U.S. is prepared to speak to Iran tomorrow. And the IAEA sees no sign of Iran nuclear weaponization. And apparently a bulletin from National Terrorism Advisory Systems warns of a heightened threat environment in the U.S. following strikes on Iran. And Rubio says Iran had all necessary ingredients to manufacture a nuclear weapon. Now, not as much. He says that Iran has enough highly enriched uranium in sufficient quantities to make at least 9 or 10 bombs. Iran's parliament says nuclear activities won't be halted. And quote, Americans must receive a response for their aggression, Iran's leader tells France Macron on the phone. U.S. orders family and non-emergency government personnel to leave Lebanon. Iran's foreign diplomat says irrelevant to ask Iran to return to talks. He says the door to diplomacy is no longer open. Trump repeats a call for Republicans to get the big, beautiful bill done on a True Social post. Russia, China, and Pakistan proposed draft in UN Security Council resolution calling for immediate unconditional ceasefire in the Middle East. JD Vance says the US is not at war with Iran. The advisor to Iran's supreme leader on X says enriched materials remain intact. He says that even assuming the complete destruction of nuclear sites, the game is not over. Dan Ives actually posted on X before this whole Strait of Hormuz situation took place. He says the market will view this Iran threat as now gone, and that is a positive for growth in the broader Middle East and ultimately the tech sector. It will take some time for this conflict to settle, but the markets will view the worst as now in the rear view mirror. Expect stocks up. Now, this is kind of like the trade war, right? Where we got the really bad tariffs on China, and then they were essentially paused or brought down. And that was, sure, still not a great situation, but the worst of it was behind us, okay? Even when negotiations started, I talked about the worst being behind us, and Wall Street can start to look past it, okay? Whenever the worst of anything is past, that's when stocks recover. Now, by tomorrow morning, there could be something that changes, even Bitcoin here bouncing a little bit. Now it's in the $99,500 range. So bounced a little bit, bounced almost $1,000 or so, $700 or so. So maybe by the morning, things can change a little bit. And maybe the situation doesn't look as threatening for the Strait of Hormuz or energy prices. But in the current state that we're in, again, I wouldn't bet the stocks are going to be up tomorrow. But I don't think this is some kind of event where you need to like sell your portfolio or even hedge your portfolio. Like if you feel the need to hedge, by all means, like that's your, choice. But typically conflicts are short-lived, and I would say there's hope for negotiations still after Iran makes some kind of show of strength. Like last time something like this happened, during Trump's first term, Trump assassinated like the top head of the nuclear program in Iran in the middle of the day, driving down the road. Okay. Iran basically called Trump and said, hey, we have to do something about this to show we're not weak. We're not actually going to hit your bases with missiles, but we're going to hit right outside your base so we can say we attacked your base. Okay. Like all the U.S. armed forces like hunkered down, like nobody was killed or injured. Some people had like, ringing in the ears, like tinnitus or whatever it's called. But that was it. Okay. It was over with. Drama resolved. We could see something like that again, but only time will tell. Now, we are going to have some pretty important economic data this week as well. Starting off on Monday, S&P Global Composite PMI, Manufacturing PMI, and Services PMIs will be coming out for June. Existing home sales for May and month over month. And then Fed Bowman, Fed Goolsbee, and Fed Kugler speak. So we heard from Fed Daily that is more in the lines of she wants to wait and see. Okay, not a huge shocker. Fed Waller came out and said, hey, we should start cutting rates in July. So there is a division that seems to be taking place at the Fed. These Fed speeches may be a little bit more important than they have been before. How far is that division? How many people are in Fed Waller's camp, or how many people are in the Fed Daily camp? The Fed has received more backlash for this Fed meeting than any other Fed meeting I can recall. Because most people say, hey, if you're data dependent, you should be cutting rates. Now the Fed is moving away from data dependency, and they are moving into a more opinion-based way of making Fed decisions. They're getting a lot of criticism for that. Like, even I have been Team Powell for over the years, but now I'm not Team Powell anymore. Following this Fed conference, this last one, at least I'm not like super Powell, Team Powell anymore, maybe is the best way to put it. Like he lost quite a bit of credibility in my eyes from moving away from the data dependent approach and moving into an opinion based approach. Everyone has opinions. Everyone. You can't argue with the facts of what's going on. And that's what Powell and the Fed is doing. Now, on Tuesday, you will have a speech from Fed Jerome Powell, I believe in front of the Senate, where he's going to be grilled on these things. The Fed should be cutting rates. I don't think he's going to get an easy pass on Tuesday and on Wednesday. He speaks both days. Now, you will get the CB Consumer Confidence and Richmond Fed Manufacturing Index that will be coming out as well. And then the S&P Case-Shiller Home Price year over year and month over month. Wednesday, again, another speech from Fed Jerome Powell. That's really the only catalyst that day. On Thursday, you get Fed Barkin that speaks in the morning. Durable goods orders month over month. Last month was a big negative number, negative 6.3%. You're expecting positive 4.5%. So expecting a big recovery there. Chicago Fed National Activity Index and the GDP growth rate quarter over quarter final estimates for Q1, expecting those to come in negative 0.2%. Initial jobless claims will also be coming out. Fed Hammock speaks, pending home sales, Kansas Fed Composite Index, Manufacturing Index, a lot of secondary data as well. But the big story likely will be durable goods orders and that final number for Q1 GDP. If it's revised up and only comes in at like negative 0.1%, I'm sure stocks are going to like that. Now, Friday, you're going to get core PCE price index month over month, expecting 0.1%. Again, Fed's preferred measure of inflation and not expecting any inflation. This would be 3 months in a row of no inflation, following what is typically a seasonally high reading in January and in February. And beyond that, You go back to November, you were at 0.1%. December was 0.2%. So if you exclude the normally high, January and February PCE, I mean, there is literally no inflation. Like, you're going to be running below target. I mean, if you look at November, which was 0.1%, we can do these calculations real quick. December, 0.2%. January, 0.3%. February, 0.5%. March, 0.1%. April, 0.1%. And presumably we get another 0.1% this week. You're looking at 1.4% total inflation since November. Divide that by 1, 2, 3, 4, 5, 6, 7. You're looking at an average of 0.2% core PCE for the last 7 months. Extrapolate that out, times that by 12, that's 2.4% core PCE. Judging off of the 0.1% readings we're getting, like if that is, if we get that this week, we get that next month, it's dramatically going to start bringing down the average here. Okay. And if you actually go to the decimal point, this number is going to be right around 2%, because a lot of these numbers were revised up, right? And you always get a round number. So there is no inflation problem, long story short. Again, that's really why it's hard to be Team Powell after this last press conference, because they don't care about the data anymore. They're just they're going based on their opinions. And that, to me, seems very flawed. Now, this week is actually going to be a really big week as far as earnings as well. Monday and after hours, you're going to get KB Homes. Tuesday pre-market, you're going to get Carnival. Tuesday and after hours, you get FedEx and BlackBerry. FedEx is huge. FedEx was normally seen as like the bellwether of the economy. And, if they have good things to say, then that's great. If they have bad things to say, it's something you should take notice of. But FedEx has really had bad things to say for years now, and it hasn't equated to a recession. It hasn't equated to any larger economic issues. Wednesday, you're going to get General Mills and Paychex pre-market, and then in after hours, Micron and Jeffries. Micron obviously kind of in that AI story, so keep that in mind. Thursday pre-market, Walgreens and McCormick, as well as some others. And then Thursday and after hours, Nike. Nike's going to be a big one. How is tariffs affecting their business? Do they plan to pass costs on to consumers? They already raised some prices. Are consumers paying those higher prices? Just in general, how are they navigating the tariff environment? That is the big question, really, for Nike, and even to a lesser extent, FedEx. Now, FedEx does international shipping, obviously, but a lot of what they do is based in the U.S. Nike pretty much manufactures like all of their goods in the East Asian market that was the most heavily hit from tariffs. So Nike, if Nike can manage to do just fine during this tariff situation, other companies are going to be able to do just fine as well. So again, I think the most pressing thing for markets in the beginning of this week, at least for Monday, is going to be this whole Iran situation. You're probably going to get that knee-jerk, sell-off tomorrow morning. Wouldn't surprise me unless there is some kind of development in a positive way. If there is, I will bring you that information. If not, I do expect stocks to be lower tomorrow. Don't be surprised when that happens. I expect energy, oil's probably going to be up 5-10% maybe more than that. We'll just again have to see and take things as we go. But I think this whole Iran situation is going to be less of a catalyst as we get later into this week. I think it'll be more about economic data, more about the Fed, and more about some of these company specific earnings. And again, Nike, like, that is, I would call like the bellwether of a tariffed company. Like, if Nike can do well, then I would expect that everyone else can do well. Now let's give a quick peek. Oh my gosh, can I not type? To how Ethereum is doing. Ethereum was harder hit, at least initially. when the Strait of Hormuz comments came out, but they're both down about 3% roughly, so not as bad as it was previously. Ladies and gentlemen, let me know your thoughts on all of this down below in the comment section. From a technical perspective, you want to watch this downtrending line around the 588 level on the SPY. If we hold support there, that's great. If we fall below that, it sets us up for levels down to the 570s or so, where your 100-day moving average is at 573, 200-day moving average at 576, and your 50-day moving average at 570. So they're all kind of bunched up in that area. Getting down to the 588 level would imply about a 1% drop, a little bit more than that, for tomorrow morning, which honestly sounds about right. So let me know your thoughts on all of this down below in the comment section. Have a great rest of your day, and I will see you in the next one.